Welcome to Section 17 of the training. In this section, we'll discuss how to tell when a trend is likely to be over by recognizing the end of the trend indication. End of the trend indications are formations of the MACD, and they let you know when a trend is over and that it is okay to take a first signal against a trend. When trading, it is very common for the market to trend and also to get signals that go against these trends. There is only one time when we can get permission to take a first signal against a trend, and we get that permission in the form of an end of the trend indication, and that is formed by the MACD. An end of the trend indication can occur on, touching, or anywhere below the zero line on the MACD. This dashed yellow line will represent the zero line that we see on the MACD. This is the only time in our methodology where the zero line is of any significance. The following is the formation that we would look for to have an end of the uptrend indication. It is simply an upside-down V shape that is formed by the MACD, and it can occur on our zero line, touching the zero line where the point of the upside-down V just touches our yellow dashed zero line, or it can occur anywhere below the zero line. Just so that's clear, let's go over it one more time. An end of the uptrend indication can occur on. Let's go to a chart and see how this actually looks. First, let's identify the sell signal that occurs at about 1532 on our timeline on this chart, with the yellow arrow pointing at our confirmation candle. The yellow arrow emphasizes the current uptrend condition that is going on in the market. Therefore, our sell signal would be considered as a first against the trend. And normally, we would have to ignore this signal as a first against the trend signal. We can take the signal, however, if we get permission to take it from the MACD, giving us an end of the uptrend indication. That permission comes in the form of this upside-down V shape, and it will occur on, touching, or anywhere below the zero line. The arrow below identifies our zero line on the MACD. Somewhere in the vicinity of our signal, we would look for our end of the trend indication on the MACD. The end of the uptrend signal here is identified by the arrow. Notice that this end of the trend signal would be considered to be on the zero line, with the point of the signal actually going over the line just a little bit. The yellow circle identifies the formation. Here's another end of the uptrend, and another, and still another. But these end of the uptrends are useless because there's no uptrend in the market at that time that they occurred. End of the trend signals happen on the MACD quite often, and it's very important that we ignore the ones that have no meaning. Only use an end of the trend signal as permission to take a signal against the trend. There is no other use for an end of the trend signal. In other words, if the market is trending and you see a signal going with that trend, but you also see an end of the trend signal on the MACD, you would ignore that end of the trend signal on the MACD and go ahead and take the signal going with the trend. The flip side to the end of the uptrend is the end of the downtrend indication. They can occur on, touching, or anywhere above the zero line. Let this dashed line once again represent our zero line, identified by the black arrow. For an end of the downtrend indication, we look for a V shape on the MACD, and it can occur on our zero line, as in this example. It can be touching our zero line, or it can be anywhere above the zero line. Again, they can occur on, touching, or anywhere above the zero line. This chart will show an example of how to use the end of the downtrend indication. First, we identify our buy signal, occurring at about 1248 on our chart timeline. The big yellow arrow identifies the strong downtrend going on in the market. So our buy signal would be considered the first against the trend, and we would ignore this signal unless we can get permission to take it from the MACD. That permission comes in the form of this V shape that is formed by the MACD in its relationship to the zero line. Here is our zero line on the MACD, and here is our end of the downtrend indication. Notice the characteristic V shape, and also notice that this indication is actually just touching the zero line. This point of the V just touches that zero line, and the V shape could also be on the line where the point crossed over a bit, or it could be anywhere above the zero line. It's very important that the end of the downtrend indication occur time-wise somewhere in the vicinity of the occurrence of our signal. The yellow circle identifies our end of the trend indication. This yellow circle identifies an incorrectly formed end of the trend signal. It is below the zero line, and that is incorrect. An end of the downtrend indication must be on or anywhere above the zero line. Also, there's no downtrend in the market associated with this signal, even if it were correct. This yellow circle identifies an end of the downtrend signal with correct formation, but it has no market downtrend condition associated with it, so we would ignore it. Here's a chart example of the use of an end of the trend indication. These three yellow lines identify the requirements for a sell signal. The yellow arrow shows our confirmation candle. Notice that the confirmation candle for this sell signal actually took about 5 minutes to form after the DS and the MACD hooked down. Sometimes market entry on a correct confirmation candle can take a while. On the MACD, the arrows identify 3 end of trend indications associated with this signal. Now, we don't actually need 3 end of the trend signals. 1 is sufficient. Although end of the trend signals are not considered high percentage trades, they will win more times than they lose. They're also useful as reinforcements to other advanced signals that we can take anyway, such as our big picture signals. This concludes section 17 of our training. If any part of this section was not totally clear, then we suggest that you review this section again. And if any questions remain, please write them down, and we'll go over those questions in the online portion of your training. If you thoroughly understood this section, then you can proceed to section 18.